GBP is seeing a decent bit of upside this morning, guys. The main thing really going on here is broader dollar weakness. So Dixie has been on the back foot this morning. We're seeing a bit of risk on in the markets. Markets kind of shrugging off those fears of that second COVID wave that we're seeing in the US and other parts of the world. So GBP definitely a beneficiary of that. Remember, GBP is quite sensitive to risk appetite. So when you see stocks rallying, when you see AUD, NZD, crude oil markets rallying, GBP tends to do well. But there's also two important domestic UK factors that I also think are contributing to GBP outperformance today. So the first one is basically reports over the weekend. You know how UK press is, it can get really crazy with the reports over the weekend, but loads of the reports basically saying that UK PM Johnson is in the coming days, probably on Tuesday, going to announce a decent easing of the lockdown in the UK, and the major thing that they're going to change is that 2 meter social distancing rule, which is currently in place. And the thing is, when you drop that 2 meter rule to say 1.5 or 1 meter, it means that hospitality venues can start to reopen, and obviously that is going to be a big plus for the UK economy, which is a good thing for GBP. The other key thing that was doing the rounds in the UK press over the weekend and could be helping GBP today is reports of a VAT cut, so value added tax. That is the tax that is on most non-essential goods that you can buy in the UK, anything, literally anything, electronics, clothing, cars, whatever. It's 20% at the moment, I believe. So if they do cut that, that is fiscal stimulus, because remember, the government spending more money is fiscal stimulus, or the government cutting taxes is fiscal stimulus, because basically the net result is the government has to go and borrow money, which means more money is being injected into the economy, because when they do this VAT cut, they're not going to cut government spending. They know it's too early to cut government spending. So they're going to be borrowing to make up for this VAT shortfall, injecting cash into the economy. And obviously when you cut VAT, it's great for consumers like me and you. Great for businesses. It helps facilitate more transactions. So, a GBP positive. However, guys, I'd be very, very cautious reading too much into these, these headlines that pop up quickly and can cause that short-term volatility in markets, because a lot of people are still very bearish on on GBP, and on USD, but very bearish on GBP. It's not just Brexit risks, which are growing. It's also the fact that the UK economy, to be honest, just generally is underperforming right now. Because think about it, the lockdown in the UK has been a lot longer than in most of Europe, US, most of the other places, developed markets in the world as well. Partly because our outbreak was worse, which meant they kept the lockdown for longer. And that means the recovery that we saw really good in the US, quite good in Europe in May and June, we're not going to have as good in the UK. So really, we're underperforming, and that's not good for GBP. There's other problems with the UK economy as well, such as the fact that we're dependent on imports and we don't have the strongest export economy. So when the rest of the world does well, it doesn't really help us out that much. Not like it helps out Germany, because when the global economy does really well, that really helps Germany. So yeah, just not looking good for GBP at the moment, guys. So just beware of downside. That is pretty much it from me for now, and I'll see you in the next one.